Welcome back to Yahoo Finance Live, everyone. Nike shares moving higher in after-hours trading after a beat on both the top and bottom line of expectations for revenue and EPS in their most recent quarter. Those results dropped after the close, and for more, let's bring in Sam Poser, who is the Williams Trading Senior Equity Analyst. Great to have you here with us today, Sam. First and foremost, just want to get your reaction from the quarter. What stood out to you?
Well, I mean, it was a much better quarter than we expected. Their direct-to-consumer business clearly is driving the boat here. It's going to be really interesting to hear what they have to say about what's happening next, especially out of China, which was slightly better than what we anticipated, but not great. They commented that the DTC business in China was down, and sales in China still have issues, and given the recent closures, we'd be looking at that very carefully. Also want to hear about the supply chain in this coming quarter. The mix of business to DTC really does help them fairly dramatically because it takes a lot of pressure off the supply chain. For every one pair they sell themselves, they basically have to sell two pairs to a wholesale account. So it appears as if they did a bit of maneuvering.
Certainly. And so given what we've seen in this most recent quarter about how well Nike Direct and that direct-to-consumer business can continue to grow, what would you expect of some of their retail partnerships that they've been exiting or moving away from, at least?
That's a big surprise question. The reason that they're moving away from people is because they want people that are really going to reinforce their brand, both from a presentation perspective as well as from an engagement perspective. And by that I mean, is the experience up to the level that Nike wants to have from a given wholesale account? And those that don't live up to the Nike standard or are feeling, for all better commentary, sort of Nike's wrath. We saw that recently. We've seen that over the past couple of years with Nike cutting back a large number of what they call undifferentiated accounts.
You mentioned China a second ago, and we do know amid the international conflict that certainly has meant that sanctions are levied against Russia amid their invasion, unprovoked, of Ukraine. And China, the partnership that they have with Russia, should China get pulled further into this, what does that mean for businesses that have significant partnerships within China or that rely on China for a significant portion of their revenue, and how you would evaluate them?
Well, this is not my expertise, but what I would say is that if China gets involved, I mean, it's sort of going to be bad news for a lot of people. And I have no real comment on that except for, be really bad news. I mean, the world economies are interlinked. China makes product for, a large number of companies, both moderate and premium companies. There's a lot of revenue being done in that country. I mean, it'd just be bad every which way you can think about it.
Perhaps we can talk about the share repurchase program. Of course, that is something that was initiated years ago, I believe back in 2018, and it seems like they're just about halfway through that already, or a little bit more than that. And so with where we see shares sitting at right now, and even if with this pop in after-hours trading, even as they continue to execute that repurchase program to give more value and return more value to shareholders, what is that next leg that you expect Nike to unlock to really unveil more of that value to shareholders?
I'm not a huge buyback analyst. I like to see them reinvest in their business and make sure that they can keep pushing along. They got a lot of cash on the balance sheet, so I understand why they're buying back stock, but I would like to see them continue to move along, push forward on their direct-to-consumer business on a global basis, and unlock it through hitting their long-term targets. That's $65 billion in the next few years.
Sam, I just want you to get creative with me for a hot second here and indulge me, because with this acquisition that they made of Artifact, direct to consumer takes on a whole different meaning, man, when you're talking about the metaverse. And so, what could a potential long lead strategy in terms of the overlap with direct to consumer digital purchases? What does that unveil in terms of the strategy for Nike?
Well, I think Nike's digital strategy is really about getting consumer information, and clearly entering the metaverse certainly helps them do that. And when they and I could see them, building young consumers up from a much younger age. I could see them getting information. I could see them taking, an item they might have on Roblox and creating it as a real item and creating a flurry of excitement around that, and vice versa. So, I think it's certainly a way to continue to build the brand, and everything they've done digitally and all the moves they're making now is just to get more and more information about their consumers and potential consumers on a global basis.